salt to umami it. Ajinomoto, the pure umami seasoning.
Chop, 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 Ajinomoto, Ajinomoto.
Introduction to MFRS 8. MFRS 8 is a Malaysian financial reporting standard that sets out guidelines on how an entity should report information about its operating segment in the annual financial statements and interim financial reports. MFRS 8 also sets out the disclosure requirements about the related products and services, geographical areas and major customer. MFRS 8 are applicable to the entities whose equity or debt securities are publicly traded. It is also applicable to the entities that in the process of issuing securities to the public. And lastly, it is also applicable to the entities who voluntarily providing segmental report.
First, let's understand what CODM means. CODM stands for Chief of Decision Making, which refers to the person or group responsible for allocating resources to different business segments and assessing their performance. It is not necessarily a specific job title, but rather a function. In many companies, the CODM role is usually carried out by the CEO or COO. Now, let's take a look at a few examples of CODM in public listed companies in Malaysia. At Ajinomoto Malaysia, Daisaku Adami was appointed as Managing Director and CEO effective 1st April 2025. As Managing Director and CEO, he performs the CODM role by allocating resources among business units, approving budgets and reviewing the performance of each segment. Next, at Dutch Lady Malaysia, the Managing Director Veronica Utami is responsible for strategic decision, resource allocation and performance reviews. In summary, the CODM plays a strategic role in guiding a company's direction to achieve sustainable goals.
Two types of segmental report used in Ajinomoto company. The two primary types of segmental reports are business segments and geographical segments. Business segment report on the company's different product or service line, while geographical segments report on the company operation in different economic environment. Business segment. These segments are based on a company's activity, such as a specific product line or a group of related products and services. The purpose is to show how different business operations contribute to overall risk and return. On the left side of the screen, I have provided a sneak peek from Ajinomoto annual report. The second type is geographical segment. These segments are based on a geographic region where a company operates, such as specific countries or areas. This allows for reporting on how operations in different economic environments affect the company's performance.
There's two key benefits of segmental reporting. The first one is help users to understand which part of the business perform better. As you can see in my left side, Ajinomoto's company have two business segments. The first one is consumer business segment and the second one is industry business segment. Based on Ajinomoto's report, consumer business segment perform better as compared to industry business segment. This is because profit or revenue and segment profit for the year 2025 for consumer business segment are higher as compared to the industry business segment. Why this is useful? This is very useful for investors to know which part of the business perform better or perform very well. And it is also help management to make a better decision, for example, invest in the stronger one and improve the weaker ones. The second key benefits of segmental reporting is help users to understand where the company's revenue come from. As you can see in my left side, there is a company Ajinomoto's report that shows three different geographical segment. The first one is Malaysia, the second one is Middle East country, and lastly are the Asian country. As you can see, if you compare of these two different geographical segments, Malaysia get the higher profit for the year 2025 and for the year 2024. Why this is useful? This is very useful because it helps investors to see how well the company perform better from different regions. And this also help company to see which market are growing and perform better and plan for expansion there.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Najab Salam. What is MFRS 134? MFRS 134 is a standard that explains how companies prepare their financial statement every quarter. Its goal to make sure investors receive accurate and consistent information about the company's performance throughout the year, not only at year-end. Under MFRS 134, the company must present condensed financial statement and includes comparative results from the same quarter last year. This helps users see short-term changes and overall trends. The benefits are timeliness, transparency, and better decision-making for both management and investors.
Two significant events and transactions that can affect an entity's financial position and performance since the end of the last annual reporting period. The first event is the acquisition or disposal of a subsidiary, business, or major asset. This kind of transaction can greatly change the company's size, structure, and future earnings. For example, in July 2023, Ajinomoto Malaysia sold 6 parcels of land located at Jalan Kuchai Lama, Kuala Lumpur for RM408 million. From this sale, the company expected a gain of around RM357 million. This transaction affects the company's total assets, goodwill, liability, and revenue potential. In short, it can increase or decrease the company's overall financial strength. The second event is the issue or repurchase of share or debt instrument. When a company issues new share or debt, it raises funds to support business growth. On the other hand, when it repurchases share, it reduces the company's capital. For example, at Ajinomoto's 64th annual general meeting, shareholders approved a resolution allowing the company to issue new ordinary shares in the future if necessary. This approval gives Ajinomoto flexibility to raise additional funds for business expansion or working capital without needing another meeting. In conclusion, both acquisition or disposal and share issue or repurchase are significant events that can have a major impact on the company's financial position and performance.
Ajinomoto Malaysia berhad financial years end on 31st March each year. Therefore, the company prepare and publish 4 quarterly interim report in accordance with MFRS 134. As shown in this table, the current financial period for the year 2024 to 2025 are compared with the same quarter from the previous year. For example, quarter 1 cover April to June 2024 and it is compared to April to June 2023. This comparative information is important because it helps users assess whether the company's financial performance has improved or declined from the previous year. It's clear demonstration of how MFRS 134 promotes consistency and comparability in financial reporting. Using the latest interim report from Ajinomoto Malaysia, the current financial quarter and 30 June 2035, which is quarter 1 for the year 2035 to 2036. The statement of financial position is reported as at 30 June 2035 compared with 30 June 2034. The profit or loss statement plus other comprehensive income, changes in equity and cash flow all cover the period from 1st April 2035 to 30 June 2035 compared to 1st April 2034 to 30 June 2024. This follows the MFRS 134 requirement to present both the current interim period and a comparative prior year period, enabling users to effectively assess the company's latest performance and compare it with the same quarter in the previous year.